Welcome to Quintessence, the Quantify podcast series. I'm very excited about today's episode where we'll explore the emerging patterns of the global insurance industry and the mega forces that are continuously shaping its future landscapes in technology as well as operations. I'm your host, Jayati Chatterjee. I am part of Quantify India Growth Leader, and joining me today are two industry stalwarts. Aditya, welcome to the show. Aditya is the partner for Everest Group for banking, financial services, and insurance, and our very own BK, the global head of financial services and insurance at Quantify. Gentlemen, welcome to the show.
Thank you for having us.
Thank you, JB, yeah, for having me here.
Thank
Really
you.
happy to join the Quantiphi team.
Excellent. Aditya, great energy, but diving right into what we want to discuss today. One of the largest generational issues that we have seen over the last century is, of course, climate change. And climate risk modeling and resilience building has become a large use case for insurance companies to solve. Insurers are facing unprecedented challenges due to increasing frequency of extreme weather events, and that is causing them to retreat from business areas because they can't make do with the cost of serving those areas and these products. So, from your experience of working with insurance worldwide, and Aditya, this is for you, how has the industry been perceiving this challenge, and what are they doing to adapt and manage this environmental changes that we are seeing and how it affects their business?
Sure, JB. First of all, I agree. Navigating these climate risks, that this presents one of the most complex challenges for insurers. Also, given the dynamic nature of these threats, right? So, if you look at some statistics here, natural disasters globally, they resulted in approximately 320 billion in economic losses in 2024. Now, the insurance covered only roughly 44% of this cost.
Mhm.
So what we are seeing is that there is an upward trend in both the total as well as the insured losses in the recent years, and that is essentially escalating the impact of these natural catastrophes. I would What I would also do is try to look at it with a different data set, right? The insured losses from these natural catastrophes, they increased by 5.9% annually in between 1994 to 2023, right? So in the same time period, the global GDP grew by 2.7%. So what this essentially means is that over the last 30 years, the relative loss burden compared to GDP has more than doubled. Now, so this increasing frequency and severity of these disasters, they have led insurers to reassess coverages in high risk areas. Some of them have withdrawn from markets like California. In addition to this, some of them have resorted, or I would say a very large portion of them have resorted to higher than average premium price increases. They have appealed to the state authorities. Some of them have actually agreed as well. But then what I truly believe is that this approach, this can boost profitability from a short term perspective. This is not sustainable. So what we also see, and what we are telling, advising our insurance clients, insurance enterprise clients on, is that there is a need for a strategic focus on building resilience, right? So which is exploring alternatives beyond retracting coverages and price hikes. As this diminishing pricing power, this will threaten the long-term profitable growth, right? And across all my conversations with insurers of late, what I've seen is that there is a significant disparity in between actual preparedness and the perceived readiness of insurers to tackle these emerging risks, let alone their vision around protect, prevent, etc. Right? So it's unfortunate that a lot of these, I would say, initiatives, these have been around incremental updates, slightly more superficial, if you can call it. Uh, what we believe is going to become more prominent. So technology and its role will become way more critical, right, in building advanced risk modeling, prevention techniques, Examples could be climate specific stress testing, scenario modeling, that kind surpasses the traditional models that are completely based on historical data. So, and those who kind of effectively utilize cloud, big data, advanced analytics, interconnected global systems, external data, insights from the telemetry devices, they are the ones who will gain the competitive edge. We see some bit of, I would say, initiatives on that regard. But down the line, what we also foresee is that insurers will develop something what we're calling as a dynamic real-time response system that continuously learns, it adapts, it ensures insurers are ahead of the curve in terms of climate resilience. It integrates intelligent technologies, emerging data sources, models potential scenarios, adapts to newer insights, and that's how it kind of helps the insurers in building a more proactive, preventive, protective actions kind of an approach. So, and I want to believe that this is not just a hypothesis, but it achieves mainstream adoption if insurers have to build a future-proof and, I would say, a resilient business model. Yeah, so that's what I think. But BK, I know that Quantiphi does a lot of work. It specializes in AI database solutions. So what has been your experience here? How do you see AI powered offerings playing a role in truly enhancing risk assessment, damage estimation, loss mitigation, helping insurers face these climate facing challenges?
Absolutely. First and foremost, I totally concur with you that this is sort of an existential question at this moment with the way climate change has been impacting the whole insurance business model, right? I mean, what it's doing fundamentally, it's creating the coverage gap in the market, and especially in certain regions where people are now struggling to get coverages, and you're seeing insurers exiting markets, etc. And technology will play a big role, and especially AI and AI powered solutions. First of all, I'll talk about a couple of examples of technology and how it kind of made material impact in the wildfires in Los Angeles earlier this year. First, you might have seen all those videos of fires coming all over the internet, helping people to know where there is a need for support, right? You'll have all the firefighters coming in. You're getting live feeds. Those were all possible because all the Starlink pods were all diverted to LA, and you were getting real time feeds. So that gave us feeds where there is a need for help. That's number one. Number two, uh, Tesla has a biohazard mode in their cars. Lot of folks who were affected by these fires went and sat in their cars and put on the mode on, and they sat there for hours just to protect them from all the smoke and dust. So wanted to talk about those two examples to talk about how technology real time helped. Now coming to the real question of AI, I think the fundamental premise here is all the historical ways, the way you used to predict climate risks from a coverage, from a risk assessment or a disaster response standpoint, are falling short, as the past no longer will be a yardstick for predicting the future because of the changing patterns. And that's where AI comes into play, where with advanced compute and computing techniques, you can real time from your workstation predict the pattern of a disaster, the changing pattern of a disaster, and how can you respond to it. And that's where Quantify has been spending a lot of time kind of finding newer partners, number one, and newer type of solutions to kind of tackle these kind of adversaries. Right now, we are working with a lot of carriers to find out ways to not only tackle catastrophes, but also the smaller convectional storms, looking at other issues where you can quickly react. You can help your claims response team react pre-disaster as well as post-disaster. Pre-disaster is all about sending notifications, making sure the insureds have the right space and are in a safe place and taking all the right precautions. And we are building solutions that are able to predict uh, what will happen in the next 6 hours. Are there some volatility that we are seeing in the pattern, etc. And post disaster, we are helping insurers in a real time look at the damage and respond to the insured real time. So that's from a disaster response standpoint, but fundamentally this all feeds into risk management as well. How are you able to understand your cohort and plan accordingly, right? So the our whole goal is to make sure the insured community is not getting affected. We have the right coverages in the regions where we are seeing increased coverage gaps. Yeah.
That's very interesting, BK. And in the Visit of War story, if Dorothy were the CEO of an insurance company, technology would be smart enough for her to able to protect her community and her company. So, uh, extremely insightful. So this was one of the external risks that the industry is facing, right? Something that we can't control, we can only manage and predict and develop resilience towards. Is there anything, any pressure that the insurance industry is facing internally? Are there any concerns? Are there any tectonic shifts happening within the industry, which is pushing them to modernize and automate? Anything that you have noticed, BK? This one is for you.
Yeah. So I think, and talking to all the various carriers we work with, as well as other friends in different industry bodies, I think one of the key factors that we are seeing that is defining the way the operating model within carrier community is changing is this whole the area where there's an aging workforce. You have a lot of people who will retire in the next 5 to 10 years, which means that you have a lot of new folks coming in. And this all is now taking place when technology is making a big shift, right? With generative AI and AI led solutions coming into picture, the way you do business is completely evolving. You also have a retiring workforce. It means that you have to think about change management in a very different way. One, you need a short-term solution of making sure the aging population is able to pick up some of this technology. But at the same time, how do you provide the right knowledge transfer, provide the right support to folks who are coming into the industry? I think that's a big operating model shift that's happening within all carriers, right? I mean, any kind of large transformation is viewed through the lens of how are you able to make sure your internal workforce is able to adapt and adapt to this changing workforce. So we have done projects where we see that adoption is directly correlated to the type of folks or the stakeholders you are addressing. So it's important that you are taking that into consideration. Aditya, you want to chime in? I'm sure you are also seeing the same kind of trends. Yeah.
Oh, absolutely. I agree with you, right? And you talked about the number of people or a big portion of this workforce retiring, right? So even if you look at some stats, as per the US Bureau of Labor Statistics, 50% of the current insurance workforce is set to retire in the next 15 years.
Yeah.
Now, this mass exodus, right? This will take within decades of, as you rightly pointed out, the institutional knowledge, and it'll leave insurers, scrambling to file critical roles like adjusters, the actuarial workforce. So carriers are facing this challenge of replacing seasoned employees and preserving the institutional knowledge at the same time, right? Um, Another way to even look at it, the younger professionals, right? They are steering clear of the insurance industry. The LinkedIn news reports, I was reading about it. Insurance ranks last in career appeal amongst the 16 to 24-year olds,
Mhm.
right? So if you think about it, the employee value proposition from an insurance industry perspective, right? You'll see folks love to work for the Silicon Valley. They love to work for the investment banks, but not really for the insurance industry, right?
Mhm.
Because it's kind of seen to some extent as a laggard when it comes to technology and technology adoption. What this essentially what this retirement wave also underscores is, I would say, the urgency for insurers to bridge the talent gap. And the way we have seen, I would say, carriers respond to this, multiple ways, right? So we have seen that there are structured mentorship, knowledge sharing programs that are being set up from a succession planning perspective. We are seeing hybrid pods that are set up. It includes both internal employees as well as vendor resources. So yes, we want to effectively scale up, but knowledge retention is important, and these hybrid pods help in doing that.
Yeah.
We've seen industry front runners invest in reskilling, upskilling interventions to equip the current and the future employees with digital skills. Specifically, I would say in areas like data analytics, automation, cloud. Those are those are the big focus areas. There are partnership pursuits with universities, technical training providers, ensure that the next generation of engineers, and there's a steady pipeline of fresh talent. Flexible work arrangements, that's definitely there. We have to address the requirements of the gig models, flexible scheduling to attract a more diverse workforce. And lastly, I would say, and I can understand that's more important for this conversation as well, the role of technology, right? Building intelligent operations, eliminate standard repeatable tasks, that has definitely gone up, right? So for instance, AI being actively leveraged to power customer interactions, automation of repetitive administrative tasks, data entry, policy generation, initial claims processing, generative AI being explored for building knowledge repositories, things like underwriting rules, claims processes, regulations,
Yeah.
everything to ensure that there is continuity, right? So I think there are a lot of initiatives being taken. The problem is real, and yes, insurers need to act now.
Yeah, and I'm also seeing a lot of trends where tie-ups with tech-focused universities are going up
Yes,
significantly.
yes,
I mean,
yes.
we have a very large carrier with we have a relationship who have set up specific facilities close to tech hubs to attract talents. And Aditya, I'm sure you have also seen the rise of this tech hub and talent pool is not just restricted to the domicile country, it's also in other locations. For example, I mean, in India specifically, you are seeing the rise of global delivery centers or capability centers, which are no longer a low cost center. It's where technology innovations happen, and we are seeing a big rise, and the talent pool is getting attracted. So there is a big shift happening in terms of how you're attracting talent, and also how you are catering to the needs of the aging workforce and making them productive, making them comfortable as they go through this.
Yeah, I agree.
Well, that's great, Aditya. I think uh, what I was thinking when you were talking about it is we have very well covered the human angle of it. How to manage the workforce, the aging
Yeah,
workforce. Sorry, how to bring in the younger workforce and make them interested into the industry. But what about automating it completely, BK? And this is for you in terms of bringing in AI assistants and agentic workflows that we are talking about. How can this contribute to the talent gap, which even after all the efforts, I think there will be a substantial gap to bridge. So
yeah,
how do you think from a tech perspective that can be addressed?
yeah. I mean, technology will play a big role as and I'm not able to remember that exact quote and the statistics, but the future job or job profiles will be completely different than what we are doing right now. So it will not be a one-to-one mapping. Technology will replace some of the existing job profiles, and we are actually leading the charge in a lot of cases, especially in the insurance sector, looking at critical business processes right from submissions, bind, post bind, FNOL. How do you service customers from a policy servicing standpoint? These are critical business processes which are touching your end stakeholders. When I talk about stakeholders, you are talking about the insured, of course. You are talking about your agent community. We are talking about your MGAs. We are talking about all external players with whom you interact in your day-to-day life. Lot of these processes can be fully automated or can be made bionic, which is basically tech-led human enabled. And then with that, you can change the way you are doing a lot of work. I mean, some of our productized offerings that Quantify bring to bear, Docify, Bionic, are actually exactly doing the same, where we are looking at those specific processes looking at the alpha that can be created there from an efficiency standpoint, and we are automating those processes for the different stakeholders in the insurance industry. I mean, I'm happy to talk in details, but Aditya, I'd love to get your thoughts around that as well in terms of how technology is enabling the change.
So absolutely, I concur. I concur. Right. See, and I think it's the way, a lot of I would say industry veterans have called this out. Right. So technology is not going to take away jobs, right? It's going
Mhm.
to create jobs. So essentially, AI is not going to take the job, but AI is going to take the job of people who don't know AI to do the job,
Yeah.
right? So I think that's the key factor. What we see is, I would say, the broader theme that we believe is important, and folks need to understand that the big theme is AI infusion. It's not about building AI. It's about infusing it in everything that we are doing. And people who are able to do it in a, I would say, in a progressive manner, having a clear view in terms of what the quick wins are, what's potentially the scaling up path. Those are the ones who are able to succeed, who are only fixated on either just thinking about the art of possible or only about the quick wins. That's where what we are seeing is that it's largely pilots, it's largely, I would say, POCs, but then folks who are thinking about it in a slightly more holistic manner and having a clearer path in terms of what that target state's gonna be like, they are the ones who are able to scale it.
Thanks, Aditya. I think that was very insightful. So essentially, it's gonna be a play between partially human, partially agentic, and the bionic aspect of it. It's gonna be very, very effective. So we talked about the external pressures, the internal pressures that the market is facing. Uh, assume a company does that, right? Manages all this, but it's still playing in a market. More and more we find where the differentiation becomes extremely challenging. uh, the products are commoditized. New purchasers don't find any difference between A and B and C, because the similarity of the products is extremely it's graying out very quickly. So this has become a huge challenge. So, and Aditya, for you, strategically in this new world, how can an insurer achieve that differentiation? Of course, you have to take into consideration the cost and the efficiency and the operational parameters onto it. And of course, and as a tech discussion, how can AI enable that? How can we bring in that differentiation? What are your views?
Sure, Jyoti. And this is a great topic, something I'm really, really passionate about as well, right? So, I would say before we kind of think about the specific tech or discuss the specific technologies, it's also about why is the need for this differentiation, right? So,
Mm,
if you look at it from an industry perspective, historically, the value articulation from insurers was largely around ensuring a risk and being effective at paying claims, right? That was the value proposition. But now what they are looking to do is to kind of pivot from an assurer to what we're calling as a guardian, right? Which means that they're looking to evolve from ensuring loss to ensuring protection and becoming effective risk mitigation providers. So that's wherein this whole intent of kind of building digital first operating models, this has become a must have if they have to compete really with the traditional players as well as the new age insurtechs. It's a necessity, right? Now, if you to break down this innovation or differentiation agenda, I would say it's largely across four areas, right? Number one, it's all around operating model innovation. Right now, this is wherein we are seeing insurers pivoting from traditional models to form what we call as product-based IT, value stream-based IT operating model. The intent is the same. The big trigger is how can I drive velocity of change? How can I drive better business IT alignment? Right. So that's the big focus. The second one is product innovation. Now, this is where I would say insurers are focusing on moving away from a one product fits all approach to launching customer centric products, truly believing in customer centricity. So think about usage based insurance products for auto insurers, parametric insurance, covers. We discussed about it when we talked about climate risk, moving away from zip code based underwriting for house fires to underwriting basis, let's say building construction materials, proximity to nearest fire stations. So this is what is kind of, I would say, sparking a lot of product innovation measures. The third one I would say is channel innovation, right? So we keep hearing about multi-channel, omni-channel
Yeah.
strategies, but then let's reflect on what it has created today, right? So distribution, it's no longer being managed only by agents and brokers. We're seeing hyper personalized products through a variety of channels, insurance getting bundled with products and services. And what we have been calling out for the past few years, that the future insurer would practically be invisible, right? Because these things as insurance is bundled at the point of sale. And the last one, I think, and it's important, services innovation, right?
Mm.
Now, this is where industry front runners, they're trying to differentiate by offering value additions, uh, leveraging power of IoT, connected ecosystems to push event-based alerts. BK talked about it, right? Pre-disaster, sharing those alerts, making people more aware, helping them take precautions, helping car owners with assistances, near around nearest garages, medical support in the event of an accident, personalized suggestions on additional covers basis, life events, or even milestones like travel, new job, new family members. So I would say those would be the four big buckets around which where we see the differentiation and innovation agenda being structured, and where we see it to be centered is around effective use of AI and associated technologies, machine learning, higher order analytics. This is where insurers are trying to build touchless, frictionless experiences for the end customers. And this is again the key reason why we have seen that AI has become the topmost priority across all insurance CIOs in 2025.
Mm.
So that's what again again I think, but I've been rambling for a while. So BK, I
Sure.
know that Quantiphi, you talked about some of these platforms as well, right? Around
Yeah.
growth and experience agenda, Docify, Bionic. So if you could just maybe
I yeah.
throw a bit color on this.
Yeah. So I mean, let's when you talk about differentiation, right? I mean, there are I three I'll break it down to the core matrices based on which the carriers run, right? I mean, you look at gross written premiums. You basically try to drive your premiums high by getting more customers to come to your fold. That's one way to do it. The other way to do it is, increase rate hikes, etc., and things like that. But those are temporary measures. At the end of the day, the clients will come to you if they see value in terms of what services you provide, how do you take care of them in the time of need, etc. That drives written premiums. And then there are the other two matrices around how you make your underwriting profitable. You take care of your loss ratios and you take care of your expense ratios. So three, I mean, written premiums, loss ratios, expense ratios. If you look at all these three and try to think about a thesis of differentiation, I think AI and AI-led solutions kind of impacts all three of them. First of all, from an experience standpoint that is being given to the end customer, there are a lot of things you can do with AI or AI enabled solutions from a differentiation standpoint, from a servicing standpoint, the way you react to them, address them, help them in their time of need. We spoke about climate change as an example. So there are a lot of different use cases that you can tackle that can create differentiation. Then on the other side, when you talk about expense ratio, there is a plethora of use cases with defined ROIs or proven ROIs in the expense ratio side, right? Where you can build seamless processes, reduce a lot of fat in the ecosystem in terms of manual effort, legacy systems, etc. You can be nimble and you can run your operations in a more efficient manner, and that helps you bring your expense ratio down, makes you more profitable, makes you more sustainable, and then you can then pump some of these monies to more customer experience, help customers differently. You can create newer products, etc. And then finally, obviously, the holy grail is underwriting profitability, being able to help tackle or get the right data points to write the risk in the most appropriate manner, and that's where data will play a huge role. I know in this whole discussion we haven't spoken about data, but modernizing your data estate is also a key aspect. You can think about a lot of AI, you can think about doing or building a lot of AI applications, but if your data, structured as well as unstructured, is not standardized, you'll always struggle. And that's where I do believe that the data strategy, data journey should either precede or run in parallel to your AI strategy. You have to think about them in conjunction. And there are a lot of modernization activities happening across the board right now. A lot of carriers are going down that path. Uh, these initiatives were very large in nature. A lot of capital expenses will come in. You have to plan such modernization activities, but with the help of newer technologies, cloud-based solutions, as well as generative AI that's now driving the way of more productivity in an SDLC process, you can modernize your estates much more faster. So I believe when you think about differentiation, you should think about from all these three different angles.
That's a
Perfect.
good,
I
that's a
think
good perspective. Yeah,
Yeah.
I think
and we get.
data discussion will call for another podcast. Sorry, Aditya. Yeah, over to you.
No, I agree with you. I'll just add one point over there, right? So I think where we have also seen this, I would say a one major change that I wanted to call out is where the industry is also pivoting to doing more agile planning and commissioning multiple micro transformations that all tie to I would say, a singular or slightly more evolving target state rather than what we have seen in the past, those big bang, big T transformations, right? So if you think about it, anyone who had a 3 or 5 year strategic large business technology transformation 12 months back, they had to redo the plan with the advent of generative AI and so many technology advancements now. So I would say the more prominent perception that we're also gathering is to sign up for a fast-paced quick win. So think of it like, for example, a data model for one LOB versus kind of undertaking the entire enterprise level data lake exercise. So go through this journey, learn, unlearn, apply all these success factors to scale this journey while moving towards a target state. So I think doing more of these in an agile manner and incrementally making those advancements, I think that's been the mantra that we've observed in the case of a lot of insurers. Yeah, back to you, Jyoti.
Yeah.
Great. Aditya, was that your summary of the whole discussion too, or would you like to add a couple of bullets there? And we'll quickly move to BK for his concluding points.
So I think we covered a lot of ground. The only
Yeah.
one thing that we have been actively also advising the clients is also around, I would say, this thought process in terms of how they're defining value of for these modernization engagements, right? So we keep hearing challenges from these the CIOs that we invest. We thought of cloud being the silver bullet in terms of saving us huge costs, and now we are signing
Yeah.
big checks. I think the big one thing that needs to also change, and it's a role that us as industry analysts, providers like Quantiphi also need to do a lot more, is to help these CIOs in defining that value. It cannot just be
Mm.
seen in the case of cost. There is agility, there is scalability, there is flexibility. I can go to market faster. It improves my cash flow situation. So a lot of these benefits, they have to be seen in tandem, and that's how you holistically define value of modernization engagements. Once I would say the industry starts doing that, or at least starts taking certain steps towards that, it'll be an easier, I would say, problem to kind of build those business cases and kind of sign up for those transformations.
Perfect. Thank you. Thank you for this, Aditya. BK, closing statements from you, please.
Sure. I mean, I think I will, and this is something that I have been talking to a lot of my clients in the last few months, quarters, etc. Right? This is an interesting time, right? Technology is changing significantly. You have a workforce that's evolving. You have a lot of external factors that's impacting the industry. We've talked about climate risk, etc. So you're seeing a lot of volatility from all angles, right? And there are geopolitical situations going across the globe as well.
Yeah.
So there can be a natural tendency to sit back and watch and let it play out instead of trying to do stuff. And I have seen a lot of carriers trying to take that approach, saying that, hey, it's a risky time to do anything. My remit is not doing anything is more riskier and will set you back many years. This is the time to jump in and follow your instincts, because the technology shift that's happening, the whole workforce shift that's happening in the industry, this is once in a generational event. And and your company's future or differentiation that we spoke about will be created or destroyed during this phase. So not doing anything and sitting back and just thinking about cost optimization will set you back many years, right? I mean, and all these companies in this carriers, they have been in the market for so many years. I mean, you have hundreds of years of legacy to protect. Don't miss this
Yeah.
opportunity.
Perfect. Thank you so much. I think it's been a great episode where we have been able to distill the various factors affecting the industry, and particularly where the offering, the agent to change itself is evolving, the technology itself is evolving so much. So thank you for your views. Very, very insightful, and let us join hands into preparing the industry for the next Black Swan event. So Aditya, BK, thank you so much.
Thank you.
Thank you so much. Take care.
Thank you.